Yeah, good morning, Karen, and thank you for the invitation. We're here in London to meet our investor base. We're in the back of our full year 24 results. We had a strong and profitable performance. We're completed year 2 of a 3-year strategy. Very strong macro backdrop, very supportive, culminating profits of 1.9 billion. And of course, as part of that results announcement, we set out our outlook to 27. Very positive view on the Irish macro backdrop, a growing loan book. But of course, part of that is ensuring that we maintain efficiency. And therefore, Bank of Ireland needs to be a leaner, more efficient organisation. And linked to that, we've set a target to keep our cost base in the region of 2 billion out over the next 3 years.
I want to get into the housing market. I was fascinated by your mortgage book and what you were saying. Up 7% on the mortgage book, 40% of new mortgage lending. We know that the housing market has been strong in Ireland. What are you seeing in terms of the heat in the market, even as the ECB promises to lower interest rates further from here?
Well, we know that the biggest factor that's driving the mortgage market in Ireland is the demand for new homes. So we know by a modest estimate there's demand for in the region of 50,000. Last year we produced 30,000. This year closer to 42,000. And that's the biggest factor that's driving certainly Bank of Ireland's role, both in supporting the funding of the building of homes, but also helping people find mortgages. Hence the mortgage book growth of 7% last year. And I expect that loan book to grow out over the next number of years. And the rate environment, as it begins to normalise in the context of inflation coming down, will help affordability for customers as well.
I know that the Irish are particularly sensitive to distortions and mindful of any excess. Do you think there's too much froth in the housing market in Ireland?
Well, again, the biggest factor is the demand for homes. So as long as we see that positive trend line that we've seen over the last number of years of more houses coming to the market, that's going to be a positive factor. I should say as well that the regulatory macro-prudential rules that govern mortgage lending, so caps on loan to value, loan to income, they're really helpful in ensuring that that level of frothiness doesn't come into the market.
Myles, I was going to ask you about the Celtic Tiger, but I think you've kind of answered all those questions as well, and it's not going to be a redux there as well. There's a very lively debate always in Dublin especially, but actually no, throughout the country, about US tech companies and about their impact. And you've only got to walk down the river in the middle of Dublin to see the impact of US tech companies on the Irish economy, or down in Cork as well, all over the place. How concerned should the Irish economy be about Trump threats as well? Yeah. Because we know it's been a stunning beneficiary of brilliant two-way trade between Ireland and the US.
Yeah, I mean, foreign direct investment is hugely important to Ireland. We employ in the region of over 300,000 people in it. It's over 10% of our workforce, so it's hugely important. There is a backdrop to that, to answer the question, Steve. So first of all, the Irish economy itself is expected to grow about 12% over the next 3 years. The domestic economy
is staggering compared to the EU average.
And it's doing very well. It's ahead of the EU average. It's driven by consumer spending, by business sentiment returning, and also by public sector investment. The broader economy is stable. However, it would be naive not to recognise that there is a risk from trade dislocation, from trade tariffs. Now, if we look at the export sector, we export just under 20% to the US. If I look to last year, very strong growth. Pharma up 18%, technology up 19.5%. And some of the fundamentals, FDI in Ireland, it's over 40 years old now. It's a capability that we've built up over time. I should say as well, much of what we do, we don't manufacture cars for export. We manufacture medicines. That's important. And also Ireland, as an English-speaking country with access to the single European market, is another positive factor.
I know, I've searched for Irish grandparents left, right, and there's nothing there, Myles, there's nothing there.
Well, I have an English wife and she's looking too, right? So, but so for sure, there is a risk. We should be mindful of it. I mean, a final point maybe just to say that from a fiscal perspective, Irish debt to GDP is at 41%. That compares to 88% to the EU average. So if challenges do emerge...
I was there during the bad times when the deficit was appalling, Myles.
Yes, 96% from memory, yeah.
But there's never been an exchequer in the history of exchequers who wanted the 13 billion less than Apple. I think that's fair to say. It was like, Apple didn't want to pay it because the Irish exchequer just didn't want it. We don't want this. We don't want this money back. We want the Apple investment. And you lost the case. Ireland had to take the money, which seems an extraordinary thing to say. But my point here is, I think you know where I'm going on this one as well. The Irish FDI, brilliant story that it has been as well, and I did a lot of work on this one a long time ago as well, has been based on a fantastic tax regime and a very, all those other great reasons why people would invest in Ireland as well. Has that gone now, though?
Well, I think the tax regime is important, but I would say it was more important some years ago because there are other attributes now of foreign direct investment. And as an example, we saw US tax rates come down from 28% to 21% without a major impact on FDI in Ireland. And of course, an awful lot of what Ireland produces for export to the US actually is repatriated back to the US as profits and therefore attracts US tax on those profits. So it is an item to be mindful of, but again, the broader strength and resilience remains robust.